The retail inflation is on the rise and it is giving headache to the RBI. But to counter that, there's a good news that the rate of unemployment is coming down. Coal India is planning to reduce the staff size by almost 5% for year-on-year basis. Few quarterly results updates, and we'll also try to understand what could be the likely scenario in the market. Hi there, my name is Hitesh and I welcome you all to Daily Market Updates by Trade Brains. If you're new to our channel, please comment, like and subscribe on our videos, and please don't forget to press the bell notification icon. So let's shift our focus to the biggest update for the day. So the retail inflation has touched 6.3% for the month of May, and which is actually beyond the RBI threshold, and which is actually putting a increased pressure on the RBI to control it. The main reasoning behind the retail inflation going up is the increased food prices and the rising fuel cost. In certain parts of the country, the fuel is trading beyond 100 rupees per litre for petrol. Now, why do we see these prices rising so rapidly? It has simply got to be COVID-19. It has had a ripple effect on the economy. The economy has slowed down, the GDPs has come down, the inflation rates are going out, and at certain point, the level of unemployment was beyond 14%. So there are a lot of factors which is going against the economy. But overall, if you look at the brighter picture, the number of COVID cases have declined, and the number of COVID cases in last 24 hours in our country is almost 60,000, which was at one point beyond 4 lakh for per day basis. However, this state of inflation is not likely to bother the central bank. That's simply because for them the main purpose right now is to get the economy back on its feet, and they have the view that the inflation can be controlled and taken care of at later point. And on the other hand, we got a good news from the unemployment sector. The level of unemployment, which was almost touching 14.7% in the month of May, has come down to only 9.7% for the week ending on June 13th. This is actually a very good data, and this is mainly owing to the economy opening up. The lockdowns have been lifted in various parts of the country. People are again going back to their jobs, and they're finding new jobs, which is actually a very good sign. And let's hope the number of people getting jobs continues to rise, and we see a very less rate of unemployment in our country. Today, Coal India also announced their Q4 results, and their consolidated net profit dropped marginally by 1% to 4,587 crores. In the previous year, same quarter, they had a profit of 4,638 crores, which reduced to 4,587 crores. So it's not a massive reduction, it's only reduction by 1%. And owing to this decline in the profits, the share price today closed by 1.4% down for the day. Their overall sales in this quarter was 24,510 crores, which was 25,600 crores in the previous year, same quarter. And in the press release, the Coal India also announced a dividend of 3.50 per share. So it has been not such a bad quarter for Coal India. Plus, they've also given certain dividend to their investors and shareholders. And the news for Coal India doesn't end there. They actually were in news again. They have actually said that they are planning to cut manpower by 5% for year-on-year basis for next 10 years. And this is mainly to reduce cost. They're saying that they're not being very profitable because their costs have gone up. So to curtail that, the employees which are not required right now or which are working on mines which are not productive will be laid off over a period of time. And it will be done in a phased out manner. Currently, Coal India employs about 272,000 people, and out of which 43% people are employed on those mines which are only contributing 5% to their sales. So they are saying that it doesn't make sense for them to running those unviable mines, and they are planning to close those mines over a period of time. Jubilant Food also announced their Q4 results. Their Q4 results were very good, but they were still below the estimates of the street and the analysts. Their profit in the previous year, same quarter, was 21.05 crores, which increased by 5 times to almost 104 crores. And the company also declared a dividend of rupees 6 per share. So it has been a very good quarter for Jubilant Foods, but the street expected better performance for them. They missed the street estimates. The revenue from operations was 1,025 crores, which was up 14.3%, but even that beat the estimates of the street. The street was expecting better revenue from operations. Their earning before interest, taxation, depreciation, amortization also rose by 47% to 250 crores nearly. It has been a very decent quarter for Jubilant Food as compared to the previous year, same quarter, but the street and analyst was expecting slightly better performance from Jubilant Foods. Now moving our focus to our favorite part, there's a number crunching part. The Nifty hit their all-time high again and it settled near that. It gapped up today, the market went up, hit the all-time high and it closed near the low for the day. So it has been a great run by Nifty. And Nifty narrowly missed the 16,000 mark by just 90 points. The high for the day was around 15,920. Sensex also performed well and it gained nearly 220 points for the day. And Bank Nifty had a very good run. It was one of the most profitable sector for the day and it gained nearly 0.9% for the day, which was a gain of 300 points. The top gainers for the day were Asian Paints, Axis Bank and ICICI Bank. And the top losers for the day were Divi's Lab, Coal India and Bajaj Finserv. Now, what are the factors which impacted the move in the market? There were three major sectors which did really well. That is the banking sector, FMCG sector and realty stocks. They all led the gains in the market. All the stocks in that sector did pretty well and they actually uplifted the mood and sentiment of the market. And when these three sectors do well, which means the economy is in a revival mode. Why? Because banking tells you the financial health, FMCG tells you the consumption health, and realty tells you whether people are willing to invest in the property sector or not. And reduction in unemployment rate. As I told you, the unemployment rate in the month of May was nearly 14.3%, which came below sub 10 levels and is actually helping the economy to revive and people are getting jobs in the market. Now, this is the hourly chart of Nifty. I didn't take daily chart because I wouldn't be able to explain you the clear picture. But if you look at this chart of hourly, the market gapped up, stayed in a range and it's actually consolidating around that level. Now the level of 15,700, which is this level which I'm marking on the screen, becomes a very critical level for the market. And to make it even more broader picture, we can take the support to be around 15,600. So as long as the market is around that level, every dip should be an opportunity to buy in the market. And once the market trades above the 16,000 levels, we should be aiming for newer highs in times to come. So that is it from us in the daily market update. I hope you got a decent grasp and understanding of the important events which transpired during the day and what could be a likely impact or move in the market tomorrow. I thank you for your patient hearing. I'll again see you tomorrow in daily market updates by Trade Brains. Thank you so much.